Hey, what's up, everybody? This is Chef, and we're going to talk about managing risk today. All right, so for beginners, and just to start this off, it's risk management depends on the trader, depends on the emotional aspect, and depends on the type of trade setup and entry that you're taking. Now, it may seem confusing at first because I personally don't think that teaching percentages is the correct thing to do. The minute that you set a percentage goal or you set a percentage limit, on your stop loss or your take profit, what you're doing is you're setting yourself up to create walls for no more growth. Okay. It's my opinion. The way that I see it is that if you're limiting yourself to the type of position that you want to take and you only want to risk a certain amount based on percentages, you are setting the walls for yourself and you're not creating any type of growth. Okay. I'm not taking away anything from those of you who do manage risk based on your percentage accounts. Not taking away anything of that. What I want to make clear is that if I were to put a limit on your potential growth, your growth process will not increase within time. All it will do, it'll create small compounding increase of growth. Okay. So that's why I said I'm not taking away anything away from those of you who are managing risk by percentages. What I'm here to talk to you about is to give you a different perspective and give you a potential mindset that may be just a bit different from the normal. Okay. And by the normal, I mean that I am not going to teach you or talk to you about managing a certain, percentages, money wise, none of that aspect. Okay. Ultimately, what we're doing here and what we're looking at is a chart. We are trading the movements, the direction, the potential breakout, the potential dip buy, the pattern setup, the news catalyst. I mean, we are trading a stock that moves based on price movements. Okay. Once something breaks above, once something breaks below, there is a point where the stock is going to move. And it's our goal, our job to make sure that we go in that direction of that particular stock, whatever it is. And this is why I personally don't agree with setting percentages as stop losses or entries or any of that nature. Okay. Again, I'm not taking away anything from your risk management. If you are somebody who's managing risk and you're only entering like 10% of your account size, then by all means, if you're cutting loss at a 15 to 10 or 20%, by all means, I hope that you follow that and you respect your stop losses based on percentages. Okay. But again, I'm here to show you something different. And I want to be able to help you increase your potential growth and your confidence. Okay. So first thing is first is that when we trade a stock, the entry points and the type of position that you're taking is going to depend on the ticker. All right. So for example, right here, what I have, and I'm just going to give you a quick breakdown on what I see value in. Okay. So let's make this remove all these things, and then this way you guys can see. All right. I guess TOS updated. Okay, that's awkward. All right, I guess never mind. I will have to check that later. I didn't know that this thing updated. All right, so what I want to point out right here is that we have a resistance right here at 10 1092, and then we have a support right here at 1066. We have a resistance right here at 1115. What is that? 1114, 1115. Okay, so you get the picture. Okay, so now I'm going to go on the 15. And Tesla is a big ticker. Tesla is a name that moves within like $10 increments, you know, $20 increments, 30, 40, 50. I mean, this thing moves. All right. Now, if you are somebody with a 1K account, I don't recommend you trade Tesla. If you are somebody with a 2K account, I highly recommend that you do not trade Tesla. Okay. If you have a 5K account, then I think at that point, you should be ready to trade something like Tesla. Number one, it's because if you take a loss on this, you're not taking a big hit on your $5,000 account. If you take a loss on this on a $2,000 account, there's a high probability that if you take a loss of like 300 bucks, you're going to go down pretty bad on your account. And what that's going to do for you is emotionally is going to mess with you. And next thing you know, when you come up with a new trade, you're not going to take it because now you're scared and emotionally beat down because you took a loss on a big ticker. All right. So account size has to match the ticker. All right. If you have $1,000 account, you're definitely not trading Tesla, Amazon, Shop, Google, Facebook. You're not trading these big names. All right. You're going to trade things like Walmart, BAC, C, small tickers that make sense. Starbucks, you know, you're going to grab tickers that move very slow. You may sit there and say, well, it doesn't move much. Well, if it doesn't move much, then maybe you should add to your account, or maybe just take a step back and not trade until you can figure out what consistency means. All right. So again, with a bigger account, you want to look for positions for Tesla. Now I'm going to give you an example right here on a few things that can help you manage your risk a little more properly, and maybe some day trading tips in between. All right. Number one, if you have a big size account, please do not go heavy on anything. All right. If you are comfortable taking a position, and it's a position that you have taken previously in the past, and you are 100% comfortable and some, go ahead and size in just a bit more. For example, if you were to see a bull flag and you have seen a bull flag pattern break out on a consistent basis, and you've always entered and you've always been green on that same position, same pattern, then by all means, if at first you started trading one contract, next time you see that bull flag, trade two contracts. Get consistent with the two contracts and build that confidence for yourself. Once you build that confidence, then go ahead and take three contracts. Once you build that consistency with the three contracts and you're trading the same bull flag pattern on any ticker, whatever it may be, you are 100% confident. So now you're building by 4, and then you build by 5, and then 6, and then 7, and this way your account grows based on what you have seen previously in the past work out. All right. So let's go look at Tesla again, like I said, and let's go look at the pre-market levels. Let's go look at YMU, right? So give you guys quick examples on day trading. I actually took this trade, called it out, and I hope everybody made some good money. So let's look at the resistance points. All right, check this out. That 1080 psychologically. All right, 1080. And then you have these wicks up here, 1088. And then you have this wick right here. What is that? 11. All right. You are aware that by the time we start breaking above, you are aware that you have some points where there is some resistance. Okay, so your entry point, I believe it's above that pre-market here, and then your first profit targets are psychologically. All right, so let's just do this. So you're in Tesla, you're in 1 or 2 contracts depending on how big of a position size you took. So if you're taking it above the pre-market, all right, your stop loss should be right below. Okay, no excuse. If you're taking this for a day trade, your stop loss is right below. All right. Now let me show you another ticker. All right. So again, I'm not here to teach you percentages. I'm not here to, talk to you about money wise and how you should be trading 5K and only stop out at 10%. I'm not teaching you none of that. All these entries are based on your risk tolerance and your risk management, right? So if you enter again, like I said, above that pre-market, your stop loss should legit be right below. Even on 115-minute candle, technically your stop loss never hit. And then you trail it all the way up and you make sure you take profit, all right? Don't sit there expecting that, oh, well, I'm going to bag hold my position and, watch this thing go up. As you can see right now, Tesla is moving, all right? Same thing again right here. What this did, created a nice little base. As you can see, there's your base, here's your wick, here's your buyer. So now Tesla's moving on up. So let's just say you enter this position here and you enter ×2 contracts because you're confident. All right, now that you're allowing this 15-minute candle to play out, you want 50% of that to hold, and that becomes your new trail stop. Okay, so now you're managing something that you entered here, and then your stop loss should be at 50% on the previous candle. All right, so I'm giving you a different type of scalp trade here now. All right, again, I'm not here to tell you, buy 10 contracts and your stop loss should be, negative 20% or 50. I'm not here for that. Again, just a reminder. All of it has to do with entry type. All right, now let's go look at Snap because I actually entered this position and I'm going to show you the 15. All right. So Snap position was a swing play. All right, the entry was yesterday. I ended up entering around 42 down here, down at these levels right at the open. I ended up taking some weekly contracts, so I ended up taking profits around this 43 level, right? So I ended up taking my swing position here at the open. And it ran all the way to that 44.30. So what do I do now since I enter here? Okay. I enter my swing, I took my day trades off the table, and then now I'm allowing the trade to go my way because technically my stop loss never hit from yesterday. So what I did is I used this pre-market level to help me manage my position to keep it green, right? So using all this space right here at the open, it popped and I sold it to strength. That just shows you like how much you're able to manage a position on a swing trade based on the previous levels, previous day, the previous entry. And now you're using your pre-market levels to help you and guide you all the way through. Okay. So now when you come in here again, you know that same level is going to get retested. All right. Now let me show you your entry based on pre-market and the way that you should manage. So do you know that this is your pre-market low? You know that we just rejected from the top. The minute you enter right here at this 43, your stop loss should be right below. There should be no excuse for you to stay in this trade. At this point, imagine if you did this 10 times in one day and you bought the dip at the pre-market level. Your entry point should be ×1 contract and your stop loss right below. Technically, we never got stopped out here because the candle opened right inside here. So it opened at 43.24 and technically you should have never stopped out. This thing ran all the way to that 43.80, giving you a great opportunity to be able to take profits. Very simple scalp trade. Now imagine doing this type of trade on a consistent basis and you've found success buying ×1 contract. Whatever the price of the contract is, don't matter. Because what you're doing is you're not trading the percentages, you're trading the type of setup and the entry type and the movement that this has potential to give you. So next time you do this ×1, ×1, ×1, you're doing ×2, ×2, ×3, ×4 contracts every single time. And the more you do this, it will help you build consistency and confidence as a trader, scalper, swing trader, whatever it is that you may be. All right. Now let me give you another one that was a great dip buy, and I'm gonna show you Amazon now. Remember that if you are having If you have a small account, you shouldn't be trading Amazon. But if you have a big account, it definitely has a lot of room to the top side, right? So again, let's look at some of these. I'm not even going to look at the contract because they're like over 4 or 5K, 6K. For some of you, can't even handle that, and you guys will probably be nervous holding, you know, a 6K, 7K position. You see a little red and then you panic sell. So look at the movement of this, right? We ended up holding on a weekly level. Well, I'm not going to show you the weekly. I'm going to show you the 4-hour. Here's a 1, 2, 3 points for Amazon where everybody had an opportunity to actually buy. I ended up swinging Amazon, which was a great swing. I know a lot of people out there swung this as well from these bottom levels. The type of setup that we have here is the rejection trend line, right? Normally, when you see a trend line, it acts as a magnet. All right. By this, what I'm saying is that first of all, we already downtrended to the downside. We already broke major levels. And the question here is Amazon going to keep on dropping? You know, everybody's bearish, and it broke this level. It broke this level to the downside, and everything was red, and market was red, and you know, everybody was on panic mode. But you failed to realize that you're at a 4-hour level, and you have levels to go back up and retest. So you have a good structure. Not only do you have a good structure, but these trend lines on a powerful downtrend and these volatile moves cause those trend lines to be like a magnet. What I'm saying is that when you land at a 4-hour level, at a weekly level, the trend line is a magnet because now your target becomes that trend line. So it pulls it back like a magnet. And that's where you get that bounce play. That's where you get that strong movement to the top side. All right. So not only am I teaching you risk management here, but also talking to you about some amazing setups, right? And explaining you in detail how these tickers play out, right? Number one, this market was red and we opened red on Monday, but we had a V-shaped recovery into Tuesday, and then today is Wednesday, and then the market is looking bullish again. So on top of that, it added on to the fact that Amazon was going to come up back here into this 3350 and attract this trend line as a magnet. So when you enter at this bottom, right here at this 4-hour, this 4-hour, and this 4-hour, you're already looking for your targets, you know, to take off some position size, and let it keep on going until it hits that magnet, that trend line. That becomes your actual bigger target. But again, it's only for those who have bigger accounts, because now you're trading a bigger ticker. And this is exactly how Amazon played out. I entered Amazon right here when I saw the market doing a V-shaped recovery, and I was already up green. I ended up taking profit on this pump right here. I think it was this one right here. I ended up taking about 40%, and this thing hit about 100, almost 130. I think it was. I'm not quite sure. The contract in itself is probably still green, but again, I don't really care. I ended up grabbing the move that I wanted as a trader, and what helped my account grow. Okay, you don't ever have to sit there and say, "Oh, this guy is still in it," or "This other guy is still in it. Should I still be holding?" No, scratch that. Okay, make sure that the move goes in your favor, and the minute that it goes in your favor, you should automatically start thinking, I need to trail my position. I need to scale out. I need to take profit. I need to lock this in because I want to grow my account. Whatever the position size, whatever the percentage was on the gain, I don't care if you made $10 on the move up while this other guy made 10K. It doesn't really matter, because what you're doing is you're entering something that you trust and you have high conviction of, based on the type of setup that it is. And you're not looking at the percentages or the profit. You're looking at the direction and the movement of a stock. That's what it comes down to. That becomes your risk management. Everyone out there, like I said, puts limits on new traders and says, and they tell you, you should only do 10% of your account. You should only do enter a position with a 15% size of your account. That way you have cash or whatever. Then they tell you you shouldn't swing, that it's better to stay cash. But how is it better for you to stay cash if you're not allowing your money to work for you in your favor while you sleep, right? Everybody has that saying, make money while you sleep, but yet you're still preaching that it's better that to stay cash in a position that that's what it is, that that's going to save you. No, it doesn't make sense. So everything that's being taught out there, everything that's being, sent out there by social media and by traders themselves, I mean, I think you can answer that for yourself, right? So that's Amazon, right? That would be your risk management. Now let me show you another ticker that I'm actually in right now. I'm actually in calls for Starbucks, right? All right, so let's check this out. Everything looks like it's bearish as heck, and it technically looks bearish, but I'm over here in some calls for January 28th, and I like the position. All right. Am I in heavy? No, by no means. I'm in a light position. I'm in ×1 contract. Okay. I don't need to come in this position and say, oh man, it's red. It's going to bounce. It's going to have the biggest bounce in the world. And next thing I know, I'm super red on my contract and super red on the position type, right? So position type that we have here, it's a red, a red candle, something that looks super bearish to everyone else out there. Are we downtrending? Yes, of course. So the risk that I'm adding on my position now is I understand that my loss, it can be very minimal. It's almost like when you see the dip keeps on dipping and it just keeps dropping and dropping and dropping. So if you know that when you buy the dip, it's a high risk, why are you buying 10, 20 contracts? You should be only buying one, right? And the minute that it decides to come back up, that's when you start to add into a position. So your risk becomes minimal. My risk right here, I'm only risking $1, right? So anything at above 104, I am going to be adding to my position. Now, I don't know what it's going to look like tomorrow. I don't know what it's going to look like in the next couple of days. All I know is that my risk here, I'm risking $1 of a move on the chart. I am not risking percentage. I am not setting a trail stop on 15% stop loss on my contract, or 50% or 60 or 70. I'm not doing any of that. I'm taking it based on a psychological number, giving myself $1 move on the stock price movement. This way, that if I do get stopped out, it'll be okay. Because if I risk $1 stop loss here, imagine if this thing were to go up in the next couple of days all the way to 115. You do the math, okay? From 104, that was my entry, all the way to 115. I'll let you do the math and I'll let you figure out how big of a move that is for a risk of $1 stop loss. Okay, right now is at 103.85. Am I right on my contract? Of course I am. Am I worried? No, because this is something that I am going to manage on my own. This is a risk that I'm taking personally to stop out on, and it's only one contract. How bad can it get? You're putting in like about $200, maybe $100, and you're going to lose a slight percentage, or you're going to look at your P&L and say it's super red. Make sure that when you're buying things like this, you are setting yourself up for a good emotional balance, because you don't want this type of position to hinder you from making another trade just like this that makes perfect sense. Okay, don't ever let those emotions hinder you. All right, so now I'm going to go on the 4-hour just to show you. Look how aggressive that move is, and I'm over here saying that I'm buying calls because I know, look at this, from the 117, or even about 117, 117.74, dropped all the way down here, and now we're creating this nice little base today, which is pretty amazing. So what base are you talking about? That's probably your question. That is this right here. Okay, that is the base that we're creating here, and if we decide to bring in some buyers here, then for sure I think I'm going to be looking for a 105 position. 106, 107. I mean, trail it on the way up, and I have time on my contract. Choosing the option contracts is the second thing that you got to be doing. I'm not trading weekly contracts here because it doesn't make sense for me. Theta, if you guys don't know, please make sure you guys understand what those Greeks are: the theta, the delta, and all those things, right? Theta is like your best friend and can be your worst enemy if you are not choosing the proper contracts. What I highly suggest, okay, in my opinion, is that you come on the trade tab, and today is Wednesday. I would go to the 28th and start grabbing these 104s and 105s and 106. So the reason for that is because you're allowing a dollar stop loss to hit, and they're not that expensive either. But again, if we go above 105, at this point you can start adding to your position at 105, add at 106, 106.50, 107. I mean, write it all the way back up. And getting time just makes sense because today's Wednesday, like I said. What if tomorrow this thing, opens at 105 or 106, or you get some type of news, whatever it is? Either way, my stop loss is still that $1 on the chart. Okay. Everything has to be based on the chart itself because that is what we're trading. Okay. Like I said, if you guys are trading percentages and you guys are stopping out on percentages, by all means, respect your own rules. But the mindset here and what we do for a living, what we do as a side hustle, you're trading the movement of a stock. That's it. Whether you're in 20K, whether you're in $10 in a position, everything still has to make sense based on the chart. Okay. So just to give you guys my opinion, just to give you a little more perspective, guys, I hope that this helps you guys understand the risk management part of trading. I know there's a lot more out there that we can potentially talk about, and the day trading strategies that you can have. And what I'm going to do is on the next video, I'm going to talk about some day trading strategies that you can potentially use in order to manage some trades. And I'm going to do the best I can to do some live just like it is right now. While market's moving, I think it just makes sense to be able to watch something play out versus the market being closed, right? Let's take a look at NQ. The way that it's moving. Look at this nice trend up anyway. All right. Again, when you're trading, make sure that you are grabbing positions based on the bases. All right. So look at this base down here. Okay. Look at the way that it reacted today. Same bounce level. We haven't made any lower lows. We're kind of just drifting on up very slowly, which is pretty amazing. So yeah, use this as a trading strategy for you guys as well. Any bases that you guys see a little cluster of candle bodies just like this, always remember that in the future, they will most likely bounce and react at those same levels, all right? So just another little tip for you guys that you guys can see. So yeah, I hope that this video helps you guys understand a little more about risk management, gives you a different perspective, and makes you, helps you make better decisions in the near future. Again, if it's something you guys are seeing and you guys are 100% confident, by all means, break those limits that you have and that you've set for yourself and that the way that everyone else out there sets for themselves. You can't grow if you don't trust yourself. You can't grow if you don't have that confidence and strong confidence in your entries. Just remember that your entry types are everything. Okay, the type of entry type that it's going to be, you make sure you stop out right below when the trade doesn't make sense, when the move direction is not going in your favor. And if it's going in your favor, by all means keep holding. Okay, if there's more green than red, then hold your calls. If there's more red than green, then hold your puts, whatever the case may be, right? So yeah, trust the process, guys. Believe in yourselves, and also understand that if the position is affecting you in an emotional way, please just get the heck out. Okay, you are oversizing or you don't trust it. Get out. If you're feeling emotional in any trade, whatever it is, get out, take profit as soon as you can, and don't re-enter anything else until you can come back in and trust the process. All right. So look at this. Tesla, it's finally gonna actually hit my target. And yeah, I was in long calls here for Tesla earlier today. Entry was here, took profit around here, and then look again, now it's just moving again. So, but yeah, stay green, guys. And if you guys have any recommendations, let me know, and we can definitely talk a little bit more of managing risk and day trading strategies for you guys. All right. So I'll see you guys on the next one. Stay green and be wise.